Good morning, guys. Welcome to this Monday, April 13th. 2 more days until tax day, right? Your taxes, you better pay it. 2 more days. Also, over the weekend, we had that Iranian talk, and that fell apart. Not completely unsurprising, you know. And going into that was an interesting dynamic, and the market was actually trading up into the close Friday. Looking for I guess optimistic, but nothing's going to happen. But in true fashion, the Iranians came in and tried to be cute about it. So it's just something that has kind of had to shake your head now. Yes, we only know what we hear. So right now they're going to blockade the strait, and so they were blockading this. Well, they were blocking the strait, I should say, and we're charging tolls, and now they turned around. Now we are blockading or the U.S. is blockading the strait and cutting off all revenue for the Iranians. So there you go. That's how you turn an issue around. But we'll see how that shakes out. Market interesting reaction though. Obviously, you would expect the market to or the oil to gap up, which it did, and market to come to gap down, which it did, and. They haven't started shooting yet, though, so that's a good sign. It seems more like it's going to be more of an economic kind of a pressure campaign at this point. So we'll see how the whole thing shakes out, but that's obviously dominating the news. Also, earnings. We had earnings come out this morning. Goldman Sachs came out with a huge beat, and we had a little reaction to the upside here early on in the morning, a few like 7 o'clock, and now they've been trading down from there. So we have a lot of stuff happening at the same time. We got that rainy situation, obviously, all eyes on that when it comes to oil prices and how that's going to impact the market. We got earnings season kicking in right now, and and of course the tax day, but that's that's just a one and done, right? So starting off this day, it's going to be an interesting dynamic. Now, news: we only have existing home sales this morning at 10. We have PPI coming out tomorrow. That's going to be an interesting one. That's going to show a higher input prices based on higher oil prices, most likely. Friday or Wednesday, we have got some news. Thursday, yeah, it's kind of light on news all week. Not a whole lot of going. Not just PPI tomorrow is the biggest one, I think. So, but earnings season is here, so we're going to get earnings after they close, and that's going to obviously be starting. Usually get them after they close, so the overnight and the next day you get more reaction. So we have a lot of stuff happening in the next few weeks. It'll be a busy time. So what's the market doing? It's so far they gapped down, they retraced some of it, and it's anyone's guess where they're going to go. Really, I mean, after they stopped shooting after the ceasefire talk, they ran it all the way up to this level, right? To this tractor area around the 68.30s and and then they're holding there for a day. They're trading up Thursday. They held up pretty good, traded up a little bit on Friday, and then we're just holding up here, maybe waiting for an optimistic outcome. And now they gap down and then right back to value again in this little distribution. So it looks pretty sloppy, but they're pretty much right back to that 68, 20 to 30 level. Now, interesting to see what happens at the open. Now, geopolitical conflicts don't usually create a lot of market directional move. It's initial knee-jerk reactions, and the market move comes from the increase in oil prices impacting on inflation and so on and so forth. So that's the calculation for the market. And right now, I think the market is looking past the whole thing. So it's yeah, a bunch of hullabaloo going on down there. And even if they start shooting, I don't think the market's going to be massively reacting because it's like the shock is over, the worst is over, and oil is all the oil tankers are coming up to the U.S. Gulf of America and loading up oil in basically the Venezuelan oil coming in to refine it in Texas. So new path for oil, and there's a lot of big changes happening in the world for sure. So we'll see. Overall, I don't think the reaction to this conflict is going to be that big. But I would start off today range bound. I would watch very carefully on the downside and see if we're going to get weakness. So that's the way I'm going to approach the market today. Given all this geopolitical stuff and all the stuff I was talking about, I think earnings is going to be coming up front and center. It does how the earnings reports coming is going to be more dominating the market than that geopolitical conflict. So I'm looking at buying weakness initially, a bit of caution, watching these lower support areas at the 67.90s, 67.80s, down to the 67.65s. These three support areas. They're going to be down here at the this lower support area on the F1. That's on 67.50 to 67.70. So that support area. If that comes out, I'm just hopping on the short chart and looking for a retracement at that point. And that to me tells me the market is just not liking this at all, and it's going to just be risk off. Now, if the beats this morning has any impact, we may get a little bit of optimism and may stay range bound. I'm not necessarily expecting a rally, and that would be if they actually have a peace agreement or something like that happens. Then I think the market takes off. But right now, I would probably expect it to be range bound, staying in this range where it's at. In other words, selling all the way up to that 68.80s, buying down to the 67.60s. And if anything, I would expect the market potentially to have a negative reaction, and that's kind of what I'm looking for. So starting off range bound right now, watching that lower end. So if they start trading higher, I'm going to be looking for shorts against the 68.30s. 68.50s, 68.60, 68.80s, 68.90s rotations down. And on the way down, I'm going to be looking to buy against support. 68.10, kind of with that trading now. 6800s, 67.90s, 67.80s, 67.65s for rotations up. So that's the dynamic. And it is so many cross currents right now that, I think a range bound is more likely to ticket. If anything, I would expect weakness to take hold early on. But if we don't see that weakness developing and you don't see any of this selling, risk off kind of mentality, then I think we have a good chance to stay range bound. I'm not expecting a rally. If we see a little bit of strength, I'm going to look to short that for rotations back down, and watch for potential outcomes. I mean, this turnaround of events where the U.S. is going to blockade the Iranian oil. In other words, cut off their whole, or they're going to block every Iranian ship. So they're not blockading any other ships, right? So if there's other nations which can go back and forth, but they won't because they're afraid to get shot at by the Iranians. So that's but it's primarily Iranian ships now. The Iranians has to import gasoline and have to export oil, and they can't do neither. So that's going to be a pretty critical thing happening pretty quick there. So what's going to happen to their economy? So we'll see. So it could very well be an economic resolution pretty quick on that thing. But if that starts happening, you get to hear something about that, and they're folding and everything is wrapping up. Yeah, I think the market has a good shot at rallying at that point. But in the meantime, while that's still going on, and oil is high, I think the market is probably going to stay in the range. If we get spectacular earnings reports, I think the market can really overcome that geopolitical thing. That would be the thing. Spectacular earnings reports coming out, and the market is absolutely looking past it. Yeah, I think we have a shot at getting a rally. So watch for the earnings report and see how that sentiment comes out, and how the market reacts to it. So that's how we get started. Looking to buy weakness all the way down to, come on, there you go. Buy weakness all the way down here to 67.60. So I'm looking to buy again 6800s, 67.90, 80, 65s, and looking for shorts against resistance. These 35s, 50s, 60s, and I believe it was 80s and 90s up here as well. So that's what we got. All right, a little bit long-winded here, but it's a lot of stuff which happened over the weekend and getting started this morning. Nasdaq also same story there. Pretty good moves going on there. The gap down as we expected it to. They're almost back here to this resistance area. And we'll see if they can get up above the 220s or above the 220s here, this whole chunk of resistance. They were up there on Friday's close and then the gap down have been done in this lower range. Again, looking to buy weakness. Same analysis on the ES, by the way. So looking to buy weakness against the 25,080s, 40s, 24,960s, 24,910s for rotations back up. Below the 910s, I think they can start retracing this whole move to the upside. And this is this huge move which happened because they when they announced the ceasefire. So that's what that caused this big move to the upside. And so far, we gapped down, traded back up again. Let's see how it develops. If it starts heading back lower and they start retracing, yeah, stay on the short side. But right now, I'm starting range bound. So if I see early strength based on earnings or whatever the market's going to do, it could run out some weak shorts as well. But so 25,190s, 220s, 260s, 300s, 350, 340s up to the 390s for rotations back down again. So that's getting short against these resistance areas, these edges all the way up there for rotations back down. Or I should say, looking for short opportunities because you never really know where it's going to stall. And on retest failures, you just have to be, you can be reasonably aggressive. On the NASDAQ, you have to be less aggressive. I mean, you can get this moves when it moves like this right now. I would be sitting on the sidelines and be a little bit cautious about it because it's moving pretty good. This sets up pretty good. Here you have a tab trade potentially setting up. So then I back here, okay, retracing a bit, coming back up to the tablet. You'll see the compressed bars forming. So it's either going to fail right now. You can get short and then it's going to fail and run right back down again, or they're going to pop it, in which case you want to have a stop pretty tight. So, or you give it a little bit more time instead of stepping in front of it with great trade location. You wait for it to another bar to form and start taking out that low. That gives you a little bit better opportunity. Right now, it looks like they're taking it higher. So this could also be just a fake out. The first little attempt to take it higher like that could be a fake out. We'll see if they keep going, then that's your extension. But that's what you're looking at. That's kind of a setup. That's being conservative or being a bit more patient about your entry. They start taking it higher about the tablet, and then we'll see if they start taking out that low. That would be a potential entry point for a short. But you can see how this moves. It's pretty volatile right now. So just have to be trading this with a little bit of caution. Expect whipsaws. So you get news come out and you get a headline or you get something like that, you can easily get the market whipping around. So always keep your stop reasonably tight, and so you get out of it in case it doesn't work out. On the bond side of things, the bonds gapped down a bit, and they have been retracing a little bit. They haven't really fallen out of bed in terms of the range. They're down here at this lower range again. Looking to buy against that 13.226 support area, 13.14s. So looking to buy against 13.226. Looking to get short against the 13.14s. To do this, I can't read the right hand side there. So 13 to 14s, 20s, up to the 25s. If this they take out the London high at the 1320s, I would take off the short bias and go back range bound. So initially looking for short against the 14s and the 20s for rotations down. They're going to buy against the 04s with a bit of caution, and we'll see if they're going to try to take it lower or they're going to stay in the range, or if they're going to trade up above that London high, in which case we take off the short bias and go back range bound. A few different options there, but we'll see how it develops. A range bound trade, so starting with a slight bias to the downside on the bonds, and then let's see how that develops from there. On the crypto side of it, I did a little bit of crypto trading here in the overnight. You can see silver moves pretty good in the overnight. I happened to get myself into one shitty trade, and it's unforgiving. So I got into on a short trade here, and I got kind of creamed on that thing. And then I made some of it back here, and then I had one more there. So I'm down $12 on that one on 7 round turns on silver. But you have the you have one thing which happens on the cryptos, you get a little bit more slippage than you want. So on my silver trade here, I got slipped 7 ticks on that fill, and it has to do with how it moves. How it moves and how it fills, how it fills you. So so they only do stop limits on Coinbase. So if you get hit on that when you stop, it's going to place a limit order to get filled, and then you put that way out the market, and it feels like a market order, but basically you fill at the bid. Well, so you fill out the offer, and if the offer skips around, yeah, you can get slipped 7 ticks on that one. That kind of sucked. I had 4 ticks in my favor and break even +4, and then I ended up -3 on it. Like great. So, anyway, so that's something to bake in now. Silver, the way they calculate commissions is a percentage of the contract value. So the commission for silver, I think, is like 280 round turn or something like that. So you have to count like, yeah, the commissions you have to make bigger moves for the commission to be offset. So that's a little bit of a downside, but that's something you have to get used to. All right. So anyway, a little bit of crypto stuff going on. I took one oil trade, didn't work. So I'm down $3 on that one, but still trading it more from a perspective of trying to figure out, get used to it, get used to the fills, get slippage information, stuff like that. See how the markets move and how much volatility you have in them. But they definitely move. So all right, so back to the ES and the Nasdaq. That's our bread and butter still. And so far, okay, it looked like the selling subsided a bit. And here you have this is a better setup. You can see at the tab, both ES and Nasdaq is up here. They're stalling, they're churning sideways. So here you have a decision point, right? Short or continuation. I would probably try a short there, and if I get run over, keep a pretty tight stop. That's kind of the way I would do that. But we'll see how it finally develops. Alrighty, guys, we'll wrap it there. So starting off range bound, slight bias to the downside, if anything, watching that lower edge, and then let's see if we're going to get weakness or you're going to stay range bound today. Alrighty, guys, then we have news at 8, also at 10, nothing at 8:30, just existing home sales. Alrighty, guys, we leave it there. Let's see back at 11:30 for the next update. Well, okay, so Mihail, so on the chart, you can certainly use the same chart. So what I did on the crypto chart, go back there. So if you look at take the silver chart for instance, or like I'll take the silver chart for instance. If I go over there and just open up a regular silver F4, I'll show you what it looks like. An F4 on silver. All right. So I started this chart on an F4 already. So that's kind of the way I started them. And then I basically adjusted from there. And you see what that looks like? So not very easy to read. All right. It looks pretty choppy, pretty sloppy. And since you're doing these bars where you have each of the you print each price level with a volume profile, it skips around. You have all these gaps in the chart. It doesn't trade on all price levels. It just skips all over the place. And see here you have super light volume, nothing happening, and then you have a bunch of volume. So this is really tough to read. So that's why I skipped those bars. I went over to the regular bid-ask chart, bid-ask bars, where you go down here and you change it to the bar from value range to bid-ask instead, which made it a little bit better. You start looking like that, but you still see this pretty choppy like this. So in order to get it more readable, instead of looking at the 3-minute bar or time bar, I went over looking at volume bar. So I'm looking at 200 contracts per bar instead, and then I made it a candlestick because it makes it readable. It says you get the whole bar to look at, even if you know within the bar it skips around. If you look at the true bid ask bar, you look at it, you see where the price is actually traded, but it doesn't. It's not very helpful to trade with. So that's why I'm looking at this the way I'm looking at it. So and then I just made the background a bit. I added the Donchian channel on it, and I made the background a little bit grayer so I can see a bit. It gets a little bit better contrast. But you also have the volume weighted mean. You have the volume histogram. That's all the base. So it's based on an F4. I just changed it a little bit how the bars look, and it went from a time to a volume. Now the equity bars obviously doesn't. They are all the same width on a volume bar, so it doesn't matter to have equity bars at that point. But those are the changes I made, and it's all about trying to make it readable. Given how choppy, like it skips around like that, and it's a little bit it's light on volume, and so that's why I came to this spot. I'm trying to find it. I may make these other charts I have on the Nasdaq. They change the background because I kind of like the contrast gets a little bit better, since I have these light yellows. So I may do that as well on these other charts. But that's kind of where I'm at on this. So that's why I changed this style. The only thing I really added was a Donchian channel on the period Donchian channel, so I can try to get a little bit more channel information. I can send you those templates as well if you're interested in looking at it. Alrighty, guys. I'll wrap it there. I'll see you back at 1:30 or 11:30 for the next update. Later.